Hey guys, thank you for joining me for a Sunday edition of Breaking Bitcoin Market Update. I'm your host, senior mentor, and lead analyst here at Cracking Cryptocurrency, Justin Wise. Hope you're doing fantastic wherever you do happen to be tuning in from. As we said, we're going to continue to come to you every day with our pre-recorded Breaking Bitcoin Market Updates until we can return for our live streams on Wednesday, assuming everything goes fantastic with the fiber installation, which I fully have faith that it will. All right, so here we are on Sunday, the close of the weekly candle, the opening back up of the CME futures, and we do see some bullish activity coming out of the cryptocurrency market in the evening hours leading up to the daily close. Recording this video about 30 minutes prior to the daily candle close, so by the time you get this, hopefully, we'll see some of this stuff played out. All right, so we're going to break down the weekly time frame analysis. We're also going to talk about the bearish order block. We're going to talk about what defines a bearish order block because I've gotten a lot of questions about that. I'll break down some of the rules that I utilize to define an area. We'll elucidate on this a little bit further as we continue on with our analysis and understanding of Bitcoin. Just to give you guys a brief update, as we talked about yesterday and prior to the day before, the bids that we had set, or the bids that, and me especially on my alternate scalping account, the bids at 49.50 actually 49.70 to 49.30 got filled, average entry of 49.50. Good trade to the upside. We did hit that initial take profit level of 51.30. We got questions, are we going to hit that 51.50 level? Obviously, we just did. Now, we'll see how that corresponds, and you do have to keep in mind the dual nature of the accounts that we're trading here with BitMEX. So the primary account is still in a short position from that average entry of 53.50, which we also pointed out on the stream. So we'll be talking about the final upside targets, and we'll be talking based on that bearish order block, where to scale into that short position and what would represent a turning point in the market, and also identifying what candles, what technical analysis will reveal a shift in market structure and how you can alter and base your trades upon that. We're also going to point out the inefficiency in Bitcoin's price that does need to be filled. And we're also going to talk about another concept to add to that theory of why Bitcoin does need to reject from that $6,000 level on the initial retest. Not if we test 6K, but when we test 6K. All right, guys, let's get into it. So let's start off with the weekly analysis of Bitcoin's price right here. Looking at the Bitstamp chart, obviously we see that not a whole lot has changed from yesterday. We are going to be closing the weekly candle with a bearish doji at the top of an uptrend. As we talked about yesterday, we've had a nice period of price expansion after testing these lows and getting the weekly buy signal from time transformation. Where is time transformation at right now, and what is it telling us about the market? Well, we are flashing our third purple dot of death for the third week in a row. We did have unnatural volume on the second weekly candle that printed the purple dot of death from time transformation. Now, is the purple dot of death a sell signal? No, it is merely there to indicate to us that Bitcoin's price is entering into the overbought territory, especially here on the higher time frames. So what we need to keep in mind is that we generally are always waiting for a confirmed sell signal or other levels or other layers to our technical strategy to tell us when to enter and exit the market. Obviously, we see key resistance here that we talked about yesterday, the 55 weekly exponential moving average and the weekly 100 exponential moving average as well, currently suppressing price. Obviously, the 55 was acting as true high resistance until it was traded above before the strong rejection that price saw after that run up to raid the highs, to raid liquidity above the close of the previous weekly candle. We've gone down and tapped into that lower level to fill resting bids around that 49.72 level that you can see right there. On the BitMEX chart, that was actually filled at 49.50. As you can see, we did trade slightly below that as well. So again, something that I've pointed out, what is the purpose of identifying what these key horizontal levels are? And for me, also my exponential moving averages on the weekly and the 3-day, as well as Ichimoku. They're to tell you where you can take advantage of a key level in the market to set a bid or an ask, right? To take advantage of where price is likely to wick down to. So we've already tapped into that area, that 49.74 level. We've already filled our resting bids there. That level is no good for us now at this point in time because we've already tested it to the downside. You can be risky and set additional bids there, but just realize and remember, just congruent to the concept that the more times you test support or resistance, the weaker it becomes. The more time you test these critical levels as well, the less volatile of a movement you're going to get off of them, right? Until they eventually and finally break down or break out after 3 to 4 tests of that level. On the lower time frames. On the higher time frames, especially the weekly with Bitcoin, you're generally not looking for that many tests, although we can see more when you have these really significant levels like our weekly 200 exponential moving average. You can see that it did take 1, 2, 3, 4, 5 attempts to break out above the 200 weekly exponential moving average after crossing below it back in November of 2018. So anyways, where is our next significant horizontal level for filling bids? It's all the way down on the weekly time frame at 4606. That is our previous crucial horizontal that was a key level of resistance back in 2017, as we can see over here. I've zoomed in on that area of the chart multiple times and elucidated on both the 4974 level and the 4606 level. Coming down below that, we have a cluster of support with our weekly 21 and our 8 weekly exponential moving average coming in at 4442. You could split the baby at 4440 if you so wanted. 4279 is going to be our weekly Tenkan. And then, of course, we do have coming in now around the $4,100 area. You could go above that a little bit. We could adjust this, but I'm going to keep it there because not only is it horizontal resistance that needs to be back tested for an SR flip, but it's also congruent with our weekly 200 exponential moving average, that area coming in right around the $4,100 area. You could have, again, a wider zone on that because as we go down to the 3-day, you will see more levels of confluence with that, 4,100 to 4,200. But again, that's too broad a range for me. Again, I'm looking for areas where it is optimum to be setting resting bids on the order book that you can take advantage of these price movements in the market. All right, now we won't be analyzing the 3-day candle. Again, for the purposes of what I've pointed out many times, whenever you have a candle and you're going to analyze a candle for the purposes of it impacting your trading strategy. So looking how it affects your technical indicators, you always want to look at that candle really close to when it closes. If you look at a candle before it's close to closing, you're not going to have all the data that candle is designed to impart to you, that it's designed to impart to your technical indicators, because they are relying upon the closing price and the variance of that candle. So for that reason, we cannot look at the 3-day because it is so fresh. We'll begin to take a look at that tomorrow evening. Now, what do we see here on the daily time frame? The daily is about to close here in about 11 minutes from where I'm now recording. Took a little bit of time in between the last few segments. But anyways, I digress. What do we see here? Again, nothing massive that's going to shift my position right now. I've still talked about the bearish order block above us. So what do we mean by that? So I've gotten a lot of questions about that. So what do we see here? We do see a swing low formed, right? Seeing a swing low or a swing high is critical to being able to identify what is going to be a breaker or a bearish order block. The terms are synonymous. So if you hear me say breaker, or if you hear somebody say order block, or if you hear somebody else say it, that's what it means. They're candles that represent a shift in market structure. So the way that a breaker is formed, or what I'm looking for when I'm doing my analysis with this method, is I'm looking for a swing to form, right? A swing low or a swing high in the market. What is a swing low or a swing high? A swing low is a low that has 2 higher lows on either side of it, directly to the left and directly to the right, indicating this is an area that was a local bottom of price action. Just as we see a swing high right here on the daily time frame to form a bullish breaker. We haven't had a shift in market structure though to be able to form a bullish breaker. The last bullish breaker is all the way down here, and we'll analyze that when we get back down to that level of the market. However, what do we see here? We see a swing low form, and we see price expansion, and then we see consolidation. And what is the first candle here, besides this one, that stands out to you as unnatural? Well, it's this candle right here. It's this bearish daily candle on the 10th of April that really began initiating this movement to the downside. And we've had 2 lazy days since that candle closed of consolidation and seeing a weak bullish reactionary candle right now. Now, when you see a shift in market structure candle, what was the last bullish candle that preceded that? Well, that would be this candle right here. And the way that I measure breakers, the way that I measure order blocks is different. I measure from open to close. Sometimes I will measure from true low to closing price on that bullish bar. It just depends. As you can see on this particular candle, I am measuring open to close. So this now represents the bearish breaker that I'm talking about, because this is 2 things. This is an area where a lot of sellers a lot of sellers entered into short positions. So what would we expect those sellers to do when price returns to their zone of initiation, right? Their entry zone. We would expect them to defend their positions, right? We'd expect them to defend their positions, and for other technical traders who see the same thing to realize, oh, hey, this is where a lot of other shorts entered. They're going to defend their positions. I should enter my shorts there as well. So it becomes a self-fulfilling prophecy, which is, some people have pointed out the argument that that's the main primary purpose of technical analysis, is to identify on the chart what are other levels that other traders are likely to do certain things. I don't buy that. I do believe that technical analysis has predictive capabilities. But again, another key point here is pointing out that technical analysis should not be for you as a trader. It's great. It's great for analysis. It does have predictive powers, great predictive powers for the purposes of analysis. But as a trader, you are using this data in a way that you can base entries and exits on to make money in the market. As a trader, it doesn't matter how good analysis is. It doesn't matter how predictive something is if you're not able to capitalize it and use it for profit. That is the only reason we're here in this market, is to pull money out of it, to provide for ourselves, to provide for our future, and to provide for our family. That is our goal at the end of the day. That is the life that we've chosen. That is the hustle that we have chosen to put on, because everybody hustles. It just depends on which way you want to do it. So anyways, we have a shift in market structure right here in an area where a lot of aggressive selling entered into the market. We would expect that when price returns to test that area, because we do see a tap into liquidity down here. Do we see a tap into liquidity down here? Do we see a shift in market structure to the upside? No, we do not. We do not see a shift in market structure, even with the bullish activity coming in the last few hours of this daily candle, leading into the open of the week, of this new week, which really, in my opinion, starts on Sunday night, because that's when the Asian markets open, that's when CME futures open back up, and we can really begin anew and get a good beat on which direction the market is going to go. So on the daily time frame, still targeting that bearish order block. There are multiple ways to enter into this, looking for an average entry in the middle of that bearish order block. And the way that you can tell, there is a very, very precise way to be able to see whether this is whether price is going to continue to the downside or whether it's not. And you don't have to wait. You don't have to set your stop loss taking the short position. It is foolish to set your stop loss up here. You're taking on far too much risk. All you're doing is you're setting your stop loss slightly above the open, or the high if you want to be a little bit more aggressive, slightly above the open of that bearish breaker, of that bearish order block, right? So as we can see here, price closes here. We have a bearish reaction candle following it. So we're going to set our stop loss slightly above this level. Now, I don't like to use hard stops. Why? Because price, especially on BitMEX, for example, which is where we are trading this particular asset, because that's the best exchange to trade it to the downside. Because price is often to be far more volatile and put in far more violent wicks than you would typically see on other assets. However, we do see this pattern play out time and time again. It is a very profitable pattern to trade. I know it's not one that I've talked about at length on this channel, but just in the purposes of highlighting multiple aspects of profitable technical analysis and revealing more and more things that do fit into my strategy, we'll see an optimum entry zone here. Now, for the purposes of taking profit, where would we look to take profit on a short entry entered from here? First, I should go over proper entries. Scaling into a position in the bearish order block is the best way to do it. I've talked at length with the premium subscribers about the best way to position in. I have a video about this. I have reference manuals for this. They're all in the resources section. So I won't labor that at length. Just suffice to say, if you guys will recall, I'm already in a short position on Bitcoin on my main account. I talked about that entry on the stream prior to that high right here. I talked about that entry throughout this whole period right here, especially these 2 days. I hammered on it significantly and talked about the zones on the chart to get an average entry of 53.50, 53.75, and 53.40. I talked about those zones, right? Sorry, excuse me, it was 53.25 and 53.75 for an average entry of 53.50. That's where I had asks. Those asks got filled, and I have an average entry on my main account from 53.50. I've already taken profits on these two candles right here. I'm about 40% out of the position with my stop loss at break even. Now, this is for the purposes of re-adding to that short position because based on everything that I've seen, I do believe it is the higher probability, low risk setup to continue this trade to the downside. So I am looking to apply more capital to it on the retest right here with a stop, as you can see where this stop loss is placed. On this, it's 53.90. On the actual XBT chart where I have it drawn and that I've provided, it's 53.50. So we're looking for a soft stop loss in that zone. That's going to be congruent with my stop loss at break even on an already profitable trade. Move your stop loss to break even and take profits. You have to take profits at some point in the market when you enter into a trade. And the purpose of this channel and the purpose of teaching you how to build your own strategy is to identify when to do that based on your indications, It is my true hope and goal that everybody that's watching this video is taking advantage of the information that I'm providing and building their own strategy to be able to do what I do and to be able to do what I do better, all right? That's why I started the Cracking Cryptocurrency community in the first place, is that so traders would have a place to go to share information, to share strategies, to share indicators, to share settings, so that you can have a supportive, collaborative community to work together with, because that is how we all benefit in the end. It's not a zero-sum game for the community of traders that actually want to make it in the market. It's only a zero-sum game for the individuals that are out there giving you poor information and are trying to take your money for poor products, whatever. There's lots and lots and lots of stuff out there that you guys need to be cautious of. But the purpose of this is to teach you how to make your own strategy. So, for a bearish strategy, for trading bearish order blocks, typically you would look to take profits on your most recent swing low. All right, that's how you identify where your take profit level is. As we already talked about, we identified this swing low to form this bearish breaker in the first place. So this zone right here, the low of this candle, 47.88 on this candle, 47.80 on the BitMEX chart, is going to represent our take profit target. Now, I actually have a take profit right here at the low of this candle. As you can see, if you can see, I do have my P&L, my short trade indicator over here, pointing down to that 47.78 level. But I also have resting bids at 47.90, or excuse me, at the low of this candle right here, which is 49.12. We'll get over to what that is on the BitMEX chart here in just a second. You can see here that this is giving us some nice confluence here on the daily chart with our daily 21 exponential moving average. And ultimately, the last take profit target is going to be that 46.06 zone, where we also have our daily 200 exponential moving average and our daily Tenkan coming in. I expect those to act as closing support for price, but I do expect price to wick down and test that 46.06 level. Doesn't mean it's going to happen perfectly like that, but that is the setup that I am trading. That's the setup that I am looking to take advantage of and capitalize on. I do want to point out one other thing that I forgot to mention yesterday, another technical reason why price is likely, or excuse me, why I firmly believe that price will reject from 6,000, but why we need to revisit the $4,000 zone and most likely below it. It's very clear and easy to understand. As you can see here on this bullish daily candle that broke price above resistance, we have an inefficiency in the market. Whenever you see a candle that looks like this, whenever you have a candle that blasts past resistance, a lot of people get excited. But what that is indicating to the market is that revisits to this zone, this is similar to a gap on a futures chart, revisits to this weak zone of liquidity, where a lot of bulls entered into positions, and essentially the market's like a game of chicken, right? The bulls are going to push price up to retest inefficiencies of the bear selling price. If you will recall, that's how we identified these key zones on the weekly time frame in the first place, right? Because we have a bearish activity rejecting from 6,000 right here until we get this weekly candle right here. We get a doji candle at the bottom of a downtrend. This was a zone in the marketplace where the bulls identified the weakness of the bear selling pressure. So what are they likely to do? They're going to push price up to see if the bears are serious about defending their positions there, to see if the bulls can push price up above, to see if the buyers can gain the upper hand and appreciate price, which is what buyers want. This is what positioned buyers want. They want to see price appreciation. We can see that for 3 months, the sellers valiantly defended that position, valiantly defended their zone right there. And we break out. We break out on an extremely bullish weekly candle right here, an extremely bullish daily candle right here. But unfortunately, for the position buyers, they have to understand the long-term aspect of this to see that price is going to retest this zone, to retest this inefficiency in the market. Why? Because sellers want to make sure that bulls are serious about defending this position. It's just how it works. I've seen it happen over and over and over again. Now, there is time dilation between this on how long and how far we go before price revisits to test those areas. But this is something to keep your eye on because it happens over and over again. And based on the fact that I've gone over in 2 daily videos now of why we need to reject from 6,000 upon the initial retest, yes. Now, I will point out another more speculative reason why Bitcoin's price will reject from 6,000. And to do this, we're going to zoom out here to the weekly chart, and I'm going to talk about this at length because this is a concept that I've been kicking around with some of my analysts and honestly in my head for a while now. And I've thought about this. And again, you have to approach the market from the mindset of, okay, what are investors, what are whales likely to do, right? Because it's not just everybody that mined a whole bunch of Bitcoin back in the day. Honestly, there are few individuals who are in Bitcoin still with the original Bitcoin that they mined back on their old laptops, or who bought it really, really cheap. There are a lot of big players that do, right? But a large majority of that Bitcoin has already passed hands multiple times and become available either through OTC or available through person-to-person trading to the non-original custodians, right? So there's a lot of Bitcoin that's been circulated and accumulated by different interested positions. So what does this area represent right here? This accumulation zone between 6,000. Well, you have to imagine that any investors who missed the massive bull run up, because we know that a lot of investors did not take Bitcoin seriously until this area right here, until we broke 5,000, and then we just went on that massive tear toward the end of 2017, as did all cryptocurrencies. That's when it came on the radar. And so, seeing as this is the original zone of breakout right here, this level of 6,000, it's going to interest, and I'm going to go ahead and take the lines off the chart just so I can talk more broadly here. This is going to be an interesting area for investors who thought that they missed the bus, and they want to accumulate at a cheaper price. So what did this area represent right here? You can see the initial breakout from that $5,000 area denoted right around here. As you can see, if I put the lines back on the chart, it becomes a little bit more evident. So they're going to take opportunities. They were looking at that floor of 6,000. They see price bottom at 6,000, and they're thinking they're going to enter into positions basically anywhere between 6,000. Unfortunately, what they were really allowing is they were acting as the selling pressure. They were acting as the buying volume for individuals who had bought quite low and thought that this really was a turning point in the market for Bitcoin, the beginning of a bear market, which anybody with a little bit of history can just go back and look at the bear markets that have gone on in Bitcoin. They've been quite significant when they go on, when they last. And they saw this as the beginning of a crypto bear market, which they would have accurately predicted. And they were using this opportunity to exchange, to move their coins into the hands of late-term investors, late-term buyers who wanted to buy around the zone of 6,000. People wanted to establish a position in 6,000, and so they were looking for revisits to the area of 6,000 to buy. As we can see, this trapped a lot of spot buyers in Bitcoin as price broke below 6,000. Now, we've already talked about this. This isn't really unique to what I've talked about before. This is why you have a lot of investors that ended up buying at 6,000 and did, in retrospect, buy at somewhat of an attractive price, but we did break bearish and enter into a further level of depreciation in the bear market of 2018, 2019. And now we have price looking to go for a retest of that zone of 6,000. Price will reject from that level, not only because of the technical reasons that I've laid out for many days now, especially over the last 2 days. So if you haven't watched the pre-records, make sure you go back and watch the last 2 daily videos. Leave any comments on them if you'd like. I always try to respond to comments within 48 hours. If you have any interesting opinions on my analysis or your own analysis, I always love to hear it. But for that reason, Bitcoin's price will reject. The other thing is this, and this is what I've been kicking around, and this is what I alluded to. Bitcoin itself. A lot of investors who establish positions here at 6,000 have seen altcoins go on massive tears, appreciating 50, 75, couple 100%, while Bitcoin has struggled to just appreciate, let's say 30% from the lows. If we actually measure it out from the swing low to the recent high, it's appreciated 73%, okay? 73% it's appreciated, while other altcoins have gone on a far more significant tear in a shorter period of time, especially in this zone right here. Especially in this zone right here, altcoins appreciated. And for those of us who actively trade this space, we know the reason why. We know that when Bitcoin's price is stable, altcoins will go on tears, which is what we saw. We saw the beginning of alt season right here, really when Bitcoin's price began appreciating, and then Bitcoin taking the charge as it jumped up on a 26.73% weekly candle. So investors are asking themselves, is Bitcoin really the future? Are there not more attractive opportunities in altcoins? And do they not represent a more attractive investment opportunity? Now, I think that they're wrong, even though I think that there are altcoins out there that I'm very interested in that I think will return very profitably over the next 5 to 10 years. But and you guys know this, so this isn't a secret, right? Bitcoin is Bitcoin, right? Bitcoin is the next Bitcoin. Bitcoin's not going anywhere. Bitcoin has the most fundamental. Bitcoin has the capacity to fundamentally change our world. Why? Because it wants to decentralize the role of government and centralized banks in our lives by giving human beings back the ability to have financial freedom and autonomy over their own personal decisions, right? Not backed by trust, not backed by authority, but backed by computer code and algorithms. It's just that simple, right? If there's a technology out there that can fundamentally change the world the same way that steam engines, the same way that railways, the same way that internet technology transformed mankind, it's going to be Bitcoin's technology. And there are a lot of projects out there that purport to do what Bitcoin does, not as well. Basically, you can, and again, I'm not a security expert, but I deign to the wisdom and the expertise of those who know more than me. And every highly intelligent person that I've talked to in the space that actually knows what they're talking about would tell me that as far as a decentralized currency goes, as far as money, the internet of money goes, if you take every other alternative to Bitcoin that attempts to do what Bitcoin does, that doesn't have a significantly different use case and is upfront about that out of the gate, they're Bitcoin with security vulnerabilities. They're Bitcoin with additional security flaws. Half the block time, security flaw. I mean, we could just go on and on and on and on and on about this, but I digress. So that's my weekly analysis. That's just another aspect of my analysis that I'm putting in there. Now, does that mean I'm trading based off of that? No, I'm trading based off my technical strategy, right? Because that has produced results to me in my career as a professional trader. But everybody wants to know what the opinion on the market is, and you do have to have an investment thesis. So it's good that my investment thesis is backing up my overall technicals in this aspect. Now, the other thing that I want to point out, and I'm actually going to go to total market cap to emphasize this, but I want you to pay attention to what time transformation is doing here on the daily time frame. It's crossing below zero. It's crossing below zero, and now we're getting a cross. It's not crossing above zero and giving us a continuation cross. It's crossing below zero. And what is Wada Atar doing? It is trading very lazily below the explosion level after a blow off top of volume right here and volatility here on the daily time frame. And it's not giving us an impressive movement. Now let's go to the total market cap to break this down a little bit more. We'll actually go over here. This is USDT dominance, which we're going to talk about in just a minute. All right, so here's the crypto total market cap that we can see right here. And obviously, guys, weekend doldrums are over, guys. We got a little bit of volatility, so let's talk about it. Now, as I just pointed out on Bitcoin's price right here, look at what time transformation is doing here on the daily. We just crossed the zero line. We just crossed below the zero line. And I'll zoom in on this so you guys can see. We just crossed below the zero line. And this daily candle did close confirmed underneath the zero line. Now, I've used time transformation. I created it. I've used time transformation for a while now, and its underlying indicator, the Fisher, for longer than I can remember. And I can point out the nuances of the system. Now, crossing below the zero line means that we have entered into the negative wave cycle of an asset, okay? Meaning that whatever we're charting is far more likely to continue depreciating rather than significantly appreciate. However, I will point this out. If we were to adjust the settings of the time transformation here, it would potentially show this cross above the zero line, depending on what your look back or what your cycle length was for time transformation. Now, I have the settings optimum to what I feel they are, but I just want to point this case out. If you've played around with the settings on time transformation and you've come to or the Fisher transform, if you don't have access, if you're not a premium subscriber, if you're not in the trading group, if you're using alternative settings that you find work out for you, they're going to digress from what I see right here. I see this as a cross below zero, and so I have to trade based off that, especially because my investment thesis, especially because my technical strategy, and especially because my other technical indicators confirm the bearishness of this activity. However, You could make the argument this is a continuation cross if your settings were such that this cross was occurring above the zero line. As I've talked about many times, a continuation cross occurs when our oscillator of choice, you can see this with stochastic, you can see this with RSI, for example, crosses up or down. You can do this with RSI, you need to put an SMA on there, but hopefully you guys understand. An oscillator with two lines where you have a lead and a signal. You see this with the MACD is probably the best. When it crosses bullish above the zero line or crosses bearish below the zero line. Now, some of my best trades have been continuation crosses. However, like I said, I need to couch what time transformation is doing in the vein of what my other technical indicators are telling me, as well as my trading strategy, as well as my investment thesis. And if we return to what Wada Atar is doing here, what is Wada Atar doing? It's printing bearish volume well below the explosion level, telling you that the bullish trade is just really not on the table. It's telling you that the market is cooling off and we are not entering into a trending state yet again. I mean, look at this print on the daily candle that we just closed. I mean, it's weak, very weak. So as my primary account is still short and looking to add to my short on a retest of the bearish order block, this is a reactionary movement after tapping some liquidity off the lows. It's not the lowest that we're going to go, and full confirmation will come when we reject from the bearish breaker over here. Now, this is how you would see this invalidated. So again, the best laid plans of mice and men. To close, you don't, as I said, you don't need to wait. If we go back to Bitcoin's price, and we can do this with market cap analysis as well, we don't need to set a stop loss for any kind of trade up here. We don't need to look for price to trade above this local high to say that, no, we've broken resistance, price is bullish. This is resistance right here. The open of this candle is now strong resistance. Why? Because this is a shift in market structure, and when a lot of positions initiated short entries, the strongest, the earliest, the biggest capital positions, this is when they initiated their short entries or sold off into the market. And again, those positions we do expect to be defended upon the retest. So if the daily closes above this open right here, same for Bitcoin's price, same for any other asset you want to apply the strategy to. If Bitcoin's price, or excuse me, if the market cap closes the daily above this level, then this is invalidated and we are going to push significantly higher for a retest of the upper boundary of the market cap right here and 5,800 on Bitcoin. That's what will happen. It's not a rate of highs if we go back up here and close above resistance now. This was a rejection from resistance, reaccumulation, and a push higher. All right, but there's no other, I don't see any other technical strategy that is telling me to buy down here based off of that. Again, we talked about the long position on the table when we went over the tensor charts order block, and we talked about the technical reasons for entering to the trade. Those bids got filled at 49.50 on average, and we were able to take profit at 51.30 and 51.50. Higher bids sitting around the $5,200 area, or higher asks, excuse me, sitting around the $5,200 area to be completely out of the position. And then again, looking for that final exit, looking for that re-entry, re-add to the short position on that retest of the levels of the bearish order block. So the best case scenario here, looking at the total crypto market cap, is 2 to 3 days of weak expansion and then rejection from that bearish OB before retesting a truly significant level of support, which is going to be our green box territory right here, retesting the inefficiency of the total crypto market cap candle right here, similar to Bitcoin's price that I was talking about earlier. This represents an attractive area in the market to be entering into positions. Now, looking at the altcoin market cap, we have an even weaker reaction here from the altcoins. Again, I talked about the difference between a buy the dip opportunity and a don't panic sell and exit your positions at the bottom. Wait till you get back to break even to exit situation or time in the market. Now, this recent low definitely represents the latter for me, as I talked about at length the last few days. Not looking to have big positions in altcoins after such a significant rejection from resistance. I've marked out same theory right here. I've marked out the significant level of resistance that we will run into. Same concept as the bearish order block. Significant levels of support are not until much lower if we're looking for bullish order blocks that I will go over at another time during another live stream, because I did identify how to properly draw a bearish order block. Same thing for bullish order blocks, but we'll talk about the previous ones that we've seen in Bitcoin's price, and then also the total market cap, which I think is more indicative, but I have drawn them out here on the altcoin market cap as well. This is, I mean, we're potentially talking about a 26% chunk taken out of the altcoin market cap here moving forward. Now let's go look at Bitcoin dominance. Let's see here. The daily on Bitcoin dominance was, there we go. Was flashing a sell signal. So I started recording this prior to the daily candle close, and now we are seeing the daily candle close. So the Bitcoin dominance did print a sell signal that did confirm. Now, while this is initially good for the altcoin structure-wise, we can see the dominance is holding consolidation at a higher level. We'll see what follow-through we get on the current daily candle, but this is a powerful signal that we do want to be aware of. This does lend credence into the fact, especially when we go look at USDT dominance, this does lend credence to the fact that that altcoins are going to have a little bit more expansion, even though the reaction that we're currently seeing is weak. Again, letting you guys know that my current system or strategy for that is to look for opportunities to exit potentially underwater positions that you might have from having bought the consolidation at higher prices in altcoins at break even, not panic selling the bottom as we talked about. Let's see here. Yeah, so not interested in long-term positional trades on altcoins at this point in time. Did not represent a buy the dip opportunity, but an opportunity to not panic sell the bottom and get out of break even on any underwater positions that one might have had in altcoins. Not a bag filling time, as a lot of positional traders would have you think. Going over to USDT dominance, on the decline with Bitcoin dominance as well. Take advantage of everybody else's buy the dip mentality and don't panic sell your alt positions. We have this gap to backfill right here, which price is attempting to do right here. Excuse me, not price, but what dominance is attempting to do right here. We have this gap. We closed here and opened up here. And also this inefficiency in the market right here that represents this zone right here. The USDT dominance will likely backfill before pushing higher. Now, as I did yesterday, because I can't interact with the live scene, I did want to respond to the comments from yesterday. So I did want to give a shout out to Brian Holm. Thank you so much for your comments, as well as Crypto King and Sarah Kevin. DW says he actually likes the recorded videos a little bit better than the live shows. I know that they're smaller format, and again, something as we move forward, I'm trying to get the other analysts on board. We're going to do more different stuff for the we're going to do more content for the channel as well, guys. Big Man from DA3 says definitely he should do this for the morning session. Thank you, man. I appreciate that. Good recommendations. I'll take those under advisement. Thank you. Anomaly123 says, love the market dominance charts and analysis. Thank you, man. Shalisha Dev and All Infinity, thank you guys so much for those positive comments. Jax Carter says the answer is simple. More buying from bulls are required. This is a bull trap and Bitcoin will fall further below 3,000 levels soon. That is a potential that we've talked about and gone over those lower levels in the price chart as well. Cool Dog 60 disagrees. Let's see here. Wally says, it is what it is, and like most hardships, will likely uncover some lesson, doorway, or alternative solution that you would have otherwise never experienced. Maybe you can take this chance to try out YouTube Premiere, so you can have an established 30 to 45 minute pre-recorded segment that you chat with people on. And the Premiere set, okay, and the main thoughts and coins you have are put out there, and people who don't have 2 hours a day to dedicate to your content will at least consume the meat. Then you follow that up with a live session with requests, comments, and additional insight. Possibly limit live sessions to Pacific time link, and then follow that up with a subscriber-only live video. That's a great idea, man. Again, I'm going to put that right in the basket as well of advisements. Always looking to increase our channel, man. Thank you so much, Wally, for your support, man. You're one of the good ones, bro. Curtis Womack. Let's see here. Says, very professional. I'm a quasi-weak trader, uneducated in any part of the field. Sorry. So I love that you talk money figures as far as levels. I couldn't care less about percentages. Other technical analysts try to be too professional, end up cutting half their audience out. I don't trade percentages. I don't carry percentages in my wallet. No retail outlet sells products for percentages, and I'm not mathematical enough to do the conversion to dollar figures. And I like that you don't reveal your strategy. Opposite of the sheep, opposite of the crowd, just like me. Good to see you, man. Thank you so much for your support. Ethan Tremblay, good to see you. And Exposed. Anonymous Mouse. Sorry that it wasn't Moose, man. Cool Dog 60 says, I think it'll break 6,000 for the end of June. And Mr. Ether says, oh, good God, Justin. All right, that's going to be the end of this video, guys. Thank you so much for your continued support. If you would like to support this content, please make sure you hit the subscribe and the notification bell and hit the like button. We highly appreciate your support. The like goal for this video is, of course, as always, 100 likes. Let's get there, guys. If you guys would like to have access to the Kraken Cryptocurrency Premium Trading Group, our private Discord community, our premium webinars designed to teach you how to build your own if this then that strategy, as well as our signals and setups to keep you in the meat until you get there yourself, you guys can, of course, check out premium.krakencryptocurrency.com. Link at the top of the screen as always, guys. This has been a fantastic video, guys, and I'll catch you in the next one. And until then, trade safely.